Hello everybody, hope they are good. First of all, thank you very much for watching yesterday's video, and of course for all the welcome messages. It made my day, so I appreciate you all. Thank you very much. Now, this is the chart that we drew in yesterday's video. If you remember, we have our range highs, our range lows. This gray line here is a potential support that we found that we could test later in the future, okay? And that would be a good entry possibly. And of course, the imbalances in the chart are this week to the upside, okay, this week here, and of course these two liquidity pools. There is a large liquidity pool to the upside and another one to the downside. So those are essentially the imbalances and the key levels that we mark in our chart. Now, if we look at what happened in the last 24 hours since yesterday's video, it's pretty much nothing, okay? Nothing happened. What is still in the 8 hours time frame above the 50 EMA, so that's a good sign. We're above support, and we were talking about the idea that this could be a good entry, or it could be a good try to long with a very small size, okay, towards the range highs. Now, if we lose the 8-hour 50 MA and we start to close candles below it, that's going to tell us the momentum is shifting, and then price could go down, okay? That's where you would open a short. That's what I'm going to do, and I'm going to aim for this these three levels, okay? You have this potential support, the gray line. That's where I would close most of my short, and of course I would open a long, aiming for that liquidity that we saw yesterday to the upside through the order book and the liquidation heat maps. And also you have this liquidity pool and this week again, okay? But basically, if we drop to this zone, there are three levels where I would like to open longs, okay? And it's this gray line here, of course the range lows, and through this liquidity pool. So I wouldn't just open one long. I would open several longs. I would basically split that size into different orders, because it might bounce away from this gray line, or it might drop a bit lower to the range lows and bounce from there, or even lower and feel like 100% of this liquidity pool. So when you are opening a position, I always recommend to build a position, okay? That's what the market maker does. The market maker doesn't open a $100 million position in one go. They split it, they DCA into the position, okay? So that's how you, that's at least how I recommend you to trade, okay? Always DCA into a position. If it's long or short, doesn't matter. Just try to DCA, okay? Because that's gonna give you two good things. The first thing is that if you are right and price keeps going down, you're gonna fill more orders, and that means that you're gonna get a better entry, okay? The second thing is that if it doesn't do that, and it just bounces from the first or the second level, you're not going to miss out that move, because at least you're going to be in partially, okay? So always try to DCA into a position. It's quite important to me at this stage to think what the retail trader is doing, okay? And it seems very clear. You go to Twitter and everybody is drawing the same chart, and it's basically this pennant here, okay? Everybody, let's go to the 4 hours time frame. It might be better. Everybody's drawing this same pennant. Everybody's looking at the same thing, and it's this, okay? This pennant. Don't even know how to draw it, I'm so sorry. But basically everybody's looking at this thing. It's a pennant, okay? And what the retail trader is doing, because this is what the textbooks say of conventional trading, it says you have a wave up, you're in a pennant, so you're going to have some consolidation, and this is meant to be bullish consolidation for another move of this same size, okay? So according to the conventional trading books, then this should basically pump. Let me do it like this, okay? So I think this is how they do it. This should basically go to the 100% of the week, okay? That's what the books say. Now, we know that the market maker likes to trap retail traders, so this is what happens in a lot of times, okay? That's your, I'm not gonna say it because I don't want to get a ban on YouTube or something. But this is what happens a lot of times, okay? That you have the move up, consolidation, then you have a fake out. This might even reach to the range highs, okay, where there is some resistance, and then you have the drop, okay? So why not? Why can't this happen? Okay? What I'm trying to say with this is that if you see a breakout from this pennant, from this triangle, don't get too excited, okay? Because this is something that happens quite often. probably as often as breaking out, okay? I think that this conventional trading system has around a 50%, 55% of winning ratio, and that's not much. So yes, they might be right. But this is also a good chance that this happens. So careful with that, okay? Don't trade based on these things. At least I don't. Just be careful. But it's good to spot them and see what people are talking about, what the retail trader is thinking, because that's what the market maker is going to use to manipulate the next move. That's why I personally like the idea of consolidation, give me a fake out to the range highs, okay? There is also, if we split this liquidity pool into two, because it's two candles, okay, we just put them there together. There is one liquidity pool here, you can see this candle, okay? So yes, why not? That's perfectly matching with the range highs. Fill the liquidity pool, and then you'll only have that other one for later on, okay? Then you can drop perhaps to the range lows again into this liquidity pool, retrace this liquidity pool. Here is what I would be opening DCN into my longs if this happened, okay? I think this is the safest play. If we drop here, I'll be happy because this is the move, this long from here, the move that I'm more convinced, I'm more confident that I'll win, okay? So I drop towards this range lows, this liquidity pool, I'll open some longs and aim to the range highs again, to this liquidity pool, and of course that wick. So that's pretty much everything that I'm saying, guys. Just be very careful with trading these pennants, because I mean the winning ratio is not worth it, okay? It's not worth to trade based on this. Of course, you can trade based on conventional trading and you can win. You can be profitable, of course you can. There are many traders that are, okay, but it's just not as easy because the winning ratio is not there, okay? 50%, 55% winning ratio is not enough for me, at least. I need more. I need 80, 85%, okay? Then I'm happy with my trading system, okay? I can trade with more confidence. So this is a trade that I'm gonna enter if I get the entry with a small size, and it's basically taking a small entry from the 50 MA in the 8 hours time frame. You can see that it's been tested as support several times, 1, 2, 3 times, okay? Give me a 4th time, perhaps I enter here then, aim for the range highs, get out there. If it continues, we'll see, okay? Because then I would like to see some consolidation above range highs. I can re-enter towards that week. Otherwise, if we drop below the 50 MA in the 8 hours time frame, I'll enter a short towards the range lows and then DCA into a long here to go back up. Pretty simple, okay? Just be careful because in this one here is where you get stopped out, because I mean this triangle can go for ages. Go to the 4 hours time frame. I've seen this on Twitter. It's happening to a lot of people, okay? You can draw this. This is how people were drawing it yesterday, okay? Yesterday people were drawing, I think it was something like this, and traders were basically opening longs in this candle here, this small green candle. Let me know if you can see it, okay? Because as you can see, it's testing the top of this triangle as support, and then people are expecting price to go up, but it doesn't. It gets back inside that pennant, okay? Then people open short. That's what traders do, okay? Traders open short again because maybe it breaks to the downside. Now that was the fake out, drop to the downside again. Price pushes back up to their entry, they get a stop again. So you can see how the retail trader gets stopped out. So careful, okay? Now probably, I mean, how do you even interpret this? Do you keep the top line of yesterday and you saying, okay, it's a test of support? Or what you can do is the triangle is not done, okay? You just readjust it and you're still inside the triangle. So it's not penance is not something that I include in my trading system. It's not something that I particularly like. I think it's useful to see what the retail trader is thinking, because most traders trade like this, and manipulation is on a core where the retail trader is trade, because that's what the market maker cares about, okay, where the money is. So be careful with this, okay, because it wouldn't be unusual if we see a fake out here and drop, or even a drop straight away, okay, and then, you know, GG. There is nothing there is nothing to look out for here, okay? So careful with that, guys. I'm not gonna go through the liquidation heat maps and neither through the order book, because I've already checked and it's pretty much the same as yesterday, so I cannot give you any more insight or information about it. So we're gonna do that, okay, just with the chart. Also, let's go to Ethereum very quickly, okay? Ethereum is pretty much again at the range highs. You can see it, okay? Ethereum is only 1.44% away from the range highs. Bitcoin, let me see. Bitcoin is pretty much, well, more than the double, 3.50%, okay? So why not? Why couldn't Bitcoin go to the range highs again before dropping, okay? Is Bitcoin going to go again to the range highs? Then of course we'll see that if it gets tested at resistance and we drop, that'll be the fake out that I'm telling you about, a pennant, okay? Or if it goes above this resistance, then hold it as support, and then that's your continuation towards that week, okay? So why not? If Ethereum has gone to the range highs pretty much, why is Bitcoin not going to do the same? All right, now if we see this drop that we're talking about to the range lows, that's going to give us some good entries not only on Bitcoin but in some altcoins. We can go to, for example, Link. We go to Link. What I see here is that we have the 4-hour 50 MA very close to the price. Price is pretty much doing some kind of sideways consolidation. So if we see that drop in Bitcoin, it's quite likely that Link also drops towards that 4-hour 50 MA, which is also, you can see a previous support here, okay? That could consolidate that support, and maybe from here you can see another leg up towards this resistance again, okay? Maybe you have here some kind of a range, okay, consolidation, and then you'll see what happens. So that's another entry that I'm looking at, and it's that if Bitcoin drops, Link should follow, okay? Go towards this 50 MA, also that support, okay? If it holds, you got yourself a good entry. Polkadot, let's go to DOT. The same, okay? You have here a liquidity pool. That could be a good entry, okay? So if you do this, why couldn't this be some kind of a W formation, okay? Retrace that liquidity pool and then have some continuation, okay? Again, what you see here, all of this that you see here is nothing but sideways. This is consolidation, okay? This is not an uptrend, it's not downtrend neither, it's consolidation, okay, after a move up, nothing else. So of course, yeah, if Bitcoin drops, then Polkadot is gonna also follow. It'll go towards this liquidity pool. It could even go lower, of course, and go back to these lows, and maybe we can look out for the W formation, okay? So that's pretty much everything that I want to say in this video, guys. Thank you so much for watching, and I'll see you soon.